The answer, I think it's a good time. I think join the market if you're not in the market. If you're in the market, then just increase your participation. That's my opinion.
Yeah.
Again, it's an opinion.
Well,
Do your research. So,
you don't have to watch
yeah.
the podcast anymore. You've got the answer. Yeah. Welcome to another episode of Hustle and Grit. Today we're going to be talking about should Canadians be buying a home in 2021. This is actually our third episode. We started this earlier this year. We were both doing it remotely, and now we're back into the office doing this face-to-face.
We're hoping to have more regular episodes now on everything real estate. Our current focus is going to be, as Harris mentioned, we have a really hot topic today. Is it the right time to buy, sell, or just participate in the market?
I think there's like a lot of back and forth with people trying to figure out whether the market's going to crash, whether the market's going to go up. Like, is it a good time to sell their house or wait and get more afterwards, or is it a good time to buy or wait and for a crash? So there's a lot of questions out there. We get it all the time. Again, as always, this episode is sponsored by Treadstone Law. So Treadstone Law, we're both real estate lawyers, practicing real estate lawyers in the province of Ontario. We do tons of transactions, and then we have a lot of experience in different pockets. So I know Treadstone Law as a firm, we practice across Ontario. Our signings are completely digital. It allows actually our clients to sign everything from their home, but it also allows us to basically see what's going on in different towns and cities.
It gives us a good high-level view of the Ontario real estate market. We're working with files or as up north as Timmins, Ontario, and all the way to Thunder Bay and Ottawa. So we really get like a wide geographic view of the real estate market.
Yeah, no, definitely. And this has been a very, I guess, controversial kind of topic. Not controversial. It's been something that a lot of people are kind of thinking about, whether they should or shouldn't be buying, because obviously for most Canadians, real estate is the most, it's the biggest source of wealth for them in their lives. It's their biggest asset for vast majority of Canadians. And so rightfully so, you want to know whether buying or selling is going to do just that. What's the short end of it? What do you think? Let's start off with the answer.
The answer, I think it's a good time. I think join the market if you're not in the market. If you're in the market, then just increase your participation. That's my opinion. Again, it's an opinion.
Well,
do your research. So,
you don't have to watch the podcast anymore. You've got the answer. Yeah. So, with that being said, one thing that I didn't want to go over again was we're going to be going over whether you should buy or sell, whatever your decision is. We host webinars weekly on all three sales transactions by yours truly, the two of us.
All three real estate transactions?
All three real estate transactions, yeah. So purchase, sale, and refinance. So whichever one you have, I'm going to put a description below, or a link below, for you guys to go check it out. I would encourage you to see that webinar, especially if you're definitely buying, selling, and refinancing, because we go over the entire process and what you should be expecting from different people, like realtors, mortgage brokers, lenders, all of that, banks, and your real estate lawyers. So if you're definitely, that you're going to be buying, selling, refinance in the next 6 months, go watch it. Even if you're like, you think that there might be a chance, I would still encourage you to watch it, because it'll give you an understanding of what kind of commitment you need in order for you to go through with a transaction. So whether you're buying, selling, or even refinancing your home, it's not a small thing. It's a pretty big decision, and there's a lot of time and effort that you would need to put in order for that whole experience to go smoothly. And it's probably a good idea for you to kind of go in and watch that webinar, see what it's all about, and then see whether you want to jump in. So whether you're buying or selling and buying, selling, or refinancing, or you think you might be, both buckets. If you're in either one of those ships, you should be watching that webinar.
Definitely recommend it. I think for a lot of clients, the first time that they're kind of seeing the process is when they're going through it, and that's not generally recommended just because you're in a stressful experience at the moment. Whether you're buying, selling, refinancing, there's a lot going on, so it's important for you to understand the process before going through it. It lets you avoid mistakes and make better decisions generally.
No, I agree, because sometimes what ends up happening, what I've seen a lot, and you could probably testify to this as well. Sometimes like things don't go smoothly. Maybe if you're selling a house, the buyer needs an extension to move forward the closing date, and you're trying to figure out what's on the line here, what kind of decision to make. Or if you're buying, the seller is not willing to clear out the property on a given date, or a host of other issues. When you're under that kind of, I guess, situation and you don't know what to expect, if somebody says something, you're going to be under even more stress because you didn't expect it coming, even though it may not be a lot. So just knowing the process overall and seeing, okay, well, when I go to a realtor, what should I be expecting? When I go to a mortgage broker or a lender or a bank, what should I be expecting? What should I be expecting from my real estate lawyer? So all of these things, when you know what your expectations are or what their role is, it's good to understand not only what you should be expecting and not be unrealistic in terms of what roles each person is playing, but also you would also have a just more peaceful understanding and develop a good relationship with everybody who's helping you buy, sell, or refinance.
It also helps you pick the right professionals too. If you know what to look for in a realtor, then you know how to pick a realtor. If you know what to look for in a mortgage broker or a real estate lawyer, you know how to pick those professionals, as opposed to kind of just generally just shooting in the dark, right? And finding out afterwards maybe you made the wrong decision.
Yeah, like just Googling and seeing what first pops up. Not that I'm saying that's a bad choice or whatever, but understanding that wherever you go to, you should have certain expectations.
So be informed. Watch the webinars.
Yeah, I would highly encourage it. It's at least for limited time. I don't know when you're watching this, but right now it is free. So we usually don't have it free. Usually it's
$199.
$199. Yeah. So $199, and you're sitting down with two lawyers for 45 minutes to an hour, right? If you went and you sat down with somebody and they were giving you advice, that kind of value is $1,500. So we already had subsidized it, but we're trying to give it out for free just because we want Canadians to understand what to expect. So it's not about kind of keeping that information. It's about letting you know so you know what's to come. So...
Okay, so without further ado, what are we talking about again?
Whether Canadians should be buying or selling their homes. Now, I got a few articles here that I wanted to kind of go over. There's a lot of kind of stuff in the news, and then I wanted to discuss a few things as to what the right decision is. Not that there is a right or wrong decision, but what's the best decision. I know that it's just been all over the place. I know that a lot of people are like, oh my God, the real estate market is blowing up. Especially if you look at like the Toronto and Vancouver markets, the increases are substantial. What's happening? Why? And all of that. And so it's getting a lot of people scared for a lot of different reasons. And I wanted to kind of discuss it. And the reason I wanted to discuss it also is because I feel like a lot of times when you're reading stuff in the newspaper, it is sensationalized just to kind of sell, for you to kind of click on whatever news article. Not to say the stats are wrong, but they're not giving, I feel like there's not a lot of context to these stats.
I agree. I think it's always what will sell. I think there was a clip that was going around on TikTok with Denzel Washington being interviewed about some propaganda or something else going on. And he was saying how the problem with the media is the goal is to publish first, not publish the correct news,
Yeah.
right? So it's the market's going to crash, the market's booming, the market's going to crash.
Yeah.
It's just reacting to any small piece of data you receive, and then people respond to that reaction itself.
And you want to pull in like strong emotions and get people, to like be like, oh my God, I really got to figure out what they're talking about. I think a lot of people have been desensitized to that. I have to give credit to a lot of the audience.
Mm-hmm.
But at the same time, I feel like there isn't a lot of information to show what's really happening, what's the right picture. So, for example, earlier this year, we're seeing increases in prices of 25, 30% jumps. And I think it was month over month or year over year, whatever it was. And now, obviously, that's not happening, but everybody's like, oh my God, it's booming, it's exploding, we're in a bubble, all this stuff. But the things that people didn't kind of show or highlight was that each month since March, the number of transactions, so the number of houses being sold and bought, is dropping anywhere between 10 to like 18%. They're dropping month over month until August, right? So until August, they're dropping, and so that's like at the end of it, from March to August, I would say anywhere between 25 to 33% drop in transactions. So that's like 1 out of 4 or 1 out of 3 houses gone. And normally, so just so you have context, in a normal market, you typically see a pop off in April, May, June, July, August. You see a lot of activity because it's summertime. Canadians can't move in the winter. And people want to get their houses and be able to move before the winter comes. Also, if you have kids especially, you'd want to move before, like there's a sweet spot. You want them to finish their whatever year they're in. And then before they start their next year, you want to be in that new house so they can adjust. You don't want to move in the middle of the year because that's very difficult on the kids. So especially like during the summer months, that was very, very, it was always like very hot, you could say. It's like peak time. This year that didn't happen. Supply went down. So obviously I would say the price would go down, right?
But it did not.
Yeah. So, if supply goes down, the price goes up.
Yeah.
So it would go up. And that's kind of something that's kind of given. It's not like it's a bubble and everybody's going crazy. There's just less houses being sold, so there's more demand. And when I say less houses, there's also less listings. Listings aren't there. There's a supply crunch, and I understand that too. People don't want to sell their home because they're in the middle of like a pandemic. They don't want people walking in and out of your house and then subjecting yourself to COVID. And I'm pretty sure people don't want to be going to other people's houses to look at houses in the middle of a pandemic.
Now, how does that impact someone's analysis of the numbers? Right? You have, this month was above record. This month was below record. This month was lower than the last 10 years. We keep having these big numbers coming up. But at the same time, we have a pandemic going on. So what, in your opinion, how seriously should we take all of those claims in light of the pandemic?
I mean, first of all, with the pandemic, you don't know what's going on, but you see why the numbers are going up as well. You have some understanding. You can't predict what's to come, or to some extent, but you could see where those numbers are coming from. If the prices of things have gone up, and you see that the listings have gone down and the number of transactions sold have gone down, you can see that there's less product on the market, you could say, for lack of better words. There's less supply, or less, layman terms, just less number of houses listed. So it's going to go up. And it's not like, we went down 1/3 or 25% from March. If your sales are supposed to double from March and we went down 25%, there's actually a bigger gap in demand than the 25% or 33% or whatever dip. So that's something that people don't like really put into context. The other thing is interest rates. So interest rates is big because interest rates went to historic lows.
Yeah, I think they're at 1% for an insured mortgage.
Yeah, so you could get, like, HSBC had a promotion for 0.99%.
Yeah, that's crazy.
Right, yeah, it was unheard of. So for all of that, you're looking at like a lot of things kind of going down that are pushing the prices up. Now, in the face of that, in a normal market, I would say, with the amount of supply going down and interest rates going down, which means your affordability goes up, you can borrow more money. I would
By
say
a lot too.
by a lot. Like, what was it 2 years ago? The interest rates?
I don't know, 3-4%, or was it more?
Yeah, it was like I would say 2-3%. I
Okay.
could 4. I mean, yeah,
Yeah.
4 was something that you'd see a lot.
2-3 was the norm, but 4
Yeah.
was, we were getting some
Yeah.
clients with 4 to 5. But
Um,
I mean, it's steadily gone down, and people don't realize if you run the numbers, the affordability is significantly different when you're going to a 3% mortgage to a 1% mortgage.
yeah.
So
Well, do you know like the numbers of like how much it would like go up
I don't
if it's
remember.
going down?
I was looking at this like I think a week or two ago, but I completely forgot. It was a decent amount. I think for an average Canadian family, your purchase price substantially changes too, right? And which is another topic itself. If interest rates go up, then what's going to happen, right? How many people are going to default on their loans?
Yeah, but I think there is like a affordability. Like you still have to qualify. There's a qualifying rate, and then there's your effective rate. So you have to qualify 4 or 5%, and then you get that 1 or 2 or whatever it is.
Yeah,
So there is like a jump now.
there's a qualifying rate, but then how does that factor in when they're insured mortgages?
Like, what do you mean? How does that factor?
So what you're saying is that a client or a potential borrower has to qualify at 5%, let's say, or what was the statement that you made?
There's a qualifying rate, so I think
Okay.
there's like 5% or whatever it is. That before you go into a bank, you're not, and the bank's saying I can give you 0.99. That doesn't mean that you qualify at the 0.99. You have to qualify at the 5.
Who sets the standards for 5?
It's the government. It's governmentally regulated.
Okay, and okay, so I guess that has an external kind of influence there.
It does, but then is the government's policy to kind of keep the housing market going? Yeah, they want to prevent the default, but I think that they can, to say that's an altruistic external kind of lever is, I don't know, because the government's also thinking recently to change the the amount that's going to be covered in insurance. The Liberals are, at least Trudeau's government.
Increasing the amount.
Increasing the amount. Right now it's like $1 million or less, $1 less than $1 million, so 999,999. You could have an insured mortgage. So insured means that it's less than 20%. But
20%
Trudeau,
down.
excuse me.
Less than 20% down.
Yeah, less than 20% down. So I think minimum 5% down. Or
Yeah.
something like that.
So yeah, something like that.
So, and then Trudeau is basically saying, okay, well, I mean, we need to push it up to over $1 million. So there are incentives for the government to relax it. But when I say, okay, you have 5% you have to qualify for, you still have, I find, other unconventional lenders kind of popping up as well.
A lot of them.
Yeah, so like if you can, even if you can qualify, you're at 5, and then you get the 1%. Your debt that you're paying is less, so you can afford other loans. Because a lot of other smaller firms, lending institutions that are not regulated in this way may say, okay, what is your total debt that you're paying out, and then how much more can I give you? So there is an overall increase in debt, and then with that, would you want to kind of try to buy a house that's maybe bigger as a result of it? When you factor in all those other kind of factors.
Yeah, but I think the you're right that there's not necessarily an altruistic motive in the government figuring out the requirements to get approval at a 5% rate.
Yeah.
But there is definitely an alignment of interests, right? The government needs, needs is the correct word, Canadians to be able to continue to afford homes.
Yeah.
Right. So there's an interest there is a motive in keeping interest rates low.
Yeah.
To make it make payments affordable too.
No, definitely. Also, I think that I would say, I think it was a few weeks ago, there was an article about how 60% of future investment in Canada was in and around the residential industry, residential real estate industry, meaning investments in infrastructure, investments in business investment, capital investments. All of that is around residential real estate. So there's a huge push to make sure this keeps going.
Which makes sense because I think Canada's economy is primarily a service-based economy with mostly knowledge workers.
Yeah.
So the biggest thing that you need is just a place for people to live. Right?
Yeah.
It's not like they need to invest more in manufacturing or resource extraction or whatever else, right?
I mean, arguably, if you're of the mindset that you're going to stick to service and that's the way to go, that's a whole different economics.
Oh yeah, I'm not making a claim of what's right. I'm saying it makes sense that it's consistent with their policy, right? That we need to have a knowledge economy. Let's invest in houses. We need more houses. But then how does that play into the fact that a lot of those houses, or we don't know how many of them, but you hear a lot of these articles saying that a lot of those houses are being bought by foreign owners who are not living in the house, who are not renting them out. They're just sitting empty.
Yeah.
Right. So that extra inventory is not really benefiting the Canadian economy. And then those houses are sitting there empty.
I mean, it goes down to this. If I sell, I'm just being hypothetical, playing devil's advocate here. I'm not saying this is what's happening. If I know that foreign investors are going to buy 10 condos, and by buying 10 condos, price of those condos is going to increase by 30%. Okay. And that will prevent 1 out of 5 Canadian families or 1 out of 10 Canadian families from buying a home. Would I, for every 10 condos sold, those condos that are being bought as investors are paying land transfer tax, they're paying property tax, they're paying all of that. Do you really have an incentive to stop that from happening?
You do not. And I think also they're buying Canadian dollar to buy that land.
Yeah.
Right. So 10 condos is at least $10 million, right? Maybe 5, 6 if they're smaller, but
essentially what you're doing is you're exporting real estate.
Yeah.
Right. And that's one of like our biggest things where Canadians export. We're an export economy. We export a lot of the stuff that we have. And we're one of the few economies in the world that somehow managed to export their real estate, even though real estate is tied to your boundaries. And so there's definitely not an incentive to prevent these increases. Now, having said that,
there is the non-resident speculation tax that the government did add that provides tons of money for them too. So I think it was like, what was the amount? I forget, 15%?
No, it's 25% of capital appreciation, of the appreciation
that's
of the
the
property.
disposition. I'm talking about
sale.
I'm talking about the speculation tax. So there's another tax that they have to buy when they're buying. So when non-resident, I think we had a client from a buyer from Africa last week, South Africa, and they bought cash, but they had to pay. Obviously, we can't provide details, but they had to pay to the government additional speculation tax. Pretty hefty checks.
Yeah. So it's a source of like strong money, but regardless, does that mean? And let's get back to our kind of question: are we buying? I mean, should Canadians be buying or selling a house in 2021?
What do you think?
Yeah, I would still say it's a good market. The other thing is that people would have to look at also the economic side and the quantitative easing side. That the at least the G7 countries or the developed countries do have a strong initiative to play a very loose monetary policy. In terms of monetary policy, they're very, very loose. So they are printing off a lot of money. Like, 50% of US dollars has been printed off in the last 12 months. I would imagine that Canadians, and I haven't seen the numbers, aren't far from that, just because all the developed countries kind of print together so that the equilibrium in terms of currency exchange rates is not thrown off. So I would definitely see that there's just more money in the environment, which means there's more inflation because it's not like there's more goods. So definitely in that kind of environment, you should be buying into, because the only thing that's worthless is your money.
The only thing that's losing value rapidly.
Yeah. And if you are thinking, oh my God, well, I'm waiting for a crash. Even if a crash happens, the prerogative of the government is going to be to increase, at least from nominally, the prices of the houses. So it's not going. I mean, there may be a dip, but if you print more money, the prices just go back up.
Yeah, the
And
crash
so-
was the real estate value might crash, but the value of the dollar was already depreciated so much
Yeah.
that it's not going to ever reach 5 years ago or something
Yeah.
like that.
Yeah. So, and also, you don't want to be trying to time, like, okay, if there was a crash, all of a sudden there's more money being printed off. I'm gonna try to figure it. Like, if you could figure that out, if anybody could figure that out, there'd be a lot of billionaires, and you can't. So, overall, I would say that the market's gonna keep trending up.
And I think historically too, we've had I think 2 or 3 downturns in the real estate market, kind of more significant than the normal cycles, and all of them more than recovered, and were still strong investments for across maybe a 5 to 10 year time frame, right?
Yeah.
So it's not really real estate has never been something that had a sustained downturn.
Yeah.
It's always been a safer investment, even compared to other asset classes.
Yeah, I mean, you've got stock market that's seems to be inflating every
Yeah,
but
every year.
every year, every day. But the thing is, if you invest in the stock market, you're investing in paper. Real estate, at least for me, it's like it's a physical thing that cannot be.
Has real value, especially
Yeah.
if there's land, or you have a detached home, or you have
Yeah,
some kind of land. You have real value that it's not a depreciating asset either.
yeah,
With a condo, there is that concern that okay, yeah, you have a property, but over time it's going to be worth less and less, and there's nothing else other than that little piece of house in the sky,
yeah,
right? So there is definitely that, and I think now recently you've seen a big push in the States as well, with these big private equity companies going out and just buying entire neighborhoods because they're preparing, is what some people say, for other asset classes to crash. So while stocks are getting a lot of interest, there's a lot of companies just buying houses
yeah.
when they weren't before doing that.
Yeah, I know after the previous, like the crash in '08, the biggest investor in, what is this, Section 8 housing in the States were these huge banks, like, and private equity firms like Citibank and BlackRock. And Section 8 housing was usually relegated to small-time investors, but these guys were coming in and buying the entire street just because they felt like real estate was the thing that had value. That you couldn't take away. So, and it really depends on how you look at things. When you see a house that's being sold for $1 million 1 year, and that same house is being sold for $2 million next year, has the value of the house gone up or has the value of the dollar gone down? Okay, because the house is the same. It's not really, the value hasn't gone up. How has the value gone up? You haven't done anything else to it. So it's really the value of the currency that's going down, and it's just going to keep going down. You got to figure out why the currency value is going down as opposed to why is the house value going up.
Which makes you think, you mentioned after the last crash, the smart money went into real estate.
Yeah.
Right now you have the smart money going into real estate right now.
Yeah.
Some people argue as a hedge against an upcoming crash, right? So then that's more reason to think, okay, maybe I should consider a real estate investment, something that's an actual physical asset as
Yeah.
opposed to
I mean,
piece of paper.
hypothetically, if you are going into a crash, here's the thing. If you're going into a crash, and I'm not saying that that's what's happening, a recessionary environment means that people don't have as much free time. You're not, like, stuff like Netflix and all these other places cannot be successful. They're only successful when you're in an environment where people have free time and they have enough money to satisfy everything else, and then they have free time. So I would argue that in a recessionary environment, these stocks actually go down, right? What does go up is real estate, because no matter what, you need a place to live. And I would say the average houses are the ones that are going to go up in value the most, because that has the most number of willing buyers.
What's an average house? What do you mean by that?
Average, I just mean like whatever, like a small, like, detached home, A starter, you're not looking at like an executive house. An executive is anything over 1 million, but I think now houses are all over
Yeah, I
a
think
million.
that number might have increased now. Maybe it's
Yeah.
1.5 or something.
Yeah, but like anything that's just like, what's your average transaction price? I think the average transaction price in like Ontario is anywhere between 7 to 900,000. So something like that, somewhere where you're not on the upper end and higher end of um, what's being done.
Okay, so an average house you think is a better decision. What about location? What do you think right now, if you're looking at the Ontario real estate market, what's a are there any cities that you think are better or
I would say if you're, I would say outside of Toronto or these bigger cities is always good. Um, Toronto, I'm not saying Toronto's a bad investment. I just feel like Toronto's probably going to appreciate the least, or like any of these bigger cities, Vancouver, wherever it is. I think they're going to appreciate the least, especially with this like, and we've talked about this you and I before with the work from home situation. People can move further away. So if they can move further away, then all these houses and developments away from the city are going to do better than what's closer to the city.
yeah, I think I was mentioning we had a like someone I know they sold their condo in Toronto for $600,000. I think it was a 500 square foot condo, 1 bedroom. They moved near Halifax for $450,000. They got a waterfront property, 2,500 square foot,
Mm,
beautiful house.
yeah.
It's crazy the difference.
Yeah, and Halifax is a beautiful city, and it's like you're getting 5 times more space and less price, and you've got this equity, or you could
Waterfront
pay.
view.
Yeah, you could. So and that has a huge effect on, at least for me, have a huge effect on the quality of life, because there's a difference. At least personally, if I'm living in a condo, because I'm not all about at least the city life as much. I like the city, but living in condos, waiting for elevators, for me, I'm not big on that. I would need some space. And typically, detached appreciate better than condos as well.
Definitely a better investment. I mean, I think condos have their benefits. It's usually for we're aging ourselves. The market usually is still younger than us for condos, the
Yeah,
average buyer, because the condo buyer is a person that wants to live in the city, wants to have that city life, going out at night and all of that stuff, that convenience that you get. Although you have other demographics in the condo market as well,
yeah,
the bigger segment is a younger buyer. Older buyers, especially when you get into your 30s,
yeah,
the elder millennials, they're no longer kind of interested in that condo
yeah,
life. So
yeah.
you have that movement towards suburbs, which probably even increased more with COVID.
But also, like with the stay at home. Well, I mean, what do you mean it increased? Wait, back that up.
Like I'm saying that if you had maybe the older millennials living in the city prior to COVID, but now with
Yeah,
COVID, you have that remote work trend.
yeah,
You have that ability to live where you want,
yeah.
and that person maybe was living in the city because they just didn't want to commute, and now they're done with that life, and they're happy to be able to move out, right? So
Yeah, and also like I think the city, to what you're saying to that effect, um, like if you're working from home, oh, there's so many businesses in the city that depend on that office life. Not only are you working there, you're living there, and all of that kind of goes away. So the city that we thought it would be, or like thought of like in 2019 or 2018, that city, I don't know if it exists anymore, because you're not going to have that vibrant kind of environment, because so many companies are like now working towards just getting you to work from home, because it's not even just about COVID-19. The cost of maintaining an office, like if you can have people work from home, why would you want to come to the office? Like you just let, I know that.
I think companies want productivity. I think the question is more if it becomes culturally acceptable or culturally kind of assumed that people have the choice to work from home, then companies are going to respond to that more, right? I think that as COVID calms down, a lot of the big head offices are going to say come back in.
I think they will, but I think that not all the jobs will come back in.
Yeah.
I think the collaborative jobs where there's creative thinking and you need to get ideas and you need to get discussions and you need all of that, definitely. That's something that's going to be coming in. But I feel like a lot of the jobs that, for example, you need, you can train somebody over a computer and they don't need to come in and there isn't that much collaboration involved. It's just kind of doing the work. Those guys are going to be like, okay, you stay at home and you could do it at home. Because I think there's a lot of that as well that kind of comes to the office because the temperament and the environment and the culture was, let's go to the office. But that doesn't mean that the prices of real estate necessarily is going to go down, because even though I think 2019 we did see a dip in values in Toronto. So they went down, I think, 2.1, 2.2, some kind of percentage like that, roughly 2%.
Driven by like most types of properties, or was it like maybe condos?
It was condos. So condos
Okay.
only went down, not the, anything else. But that was also because there was a change in the law because of, I think it was Airbnb was not like allowed into condos unless everybody got together and agreed to have it allowed. And so then you had like 4,000 extra units on
Oh wow.
on the market than you would normally. So that's why it dipped, and everybody's kind of like, oh my God, it's because of COVID that everything's coming to an end. It's not. It was because there's another legal change, but it just happened to happen at the same time as COVID. So you had a little bit of a dip, but then it was going back up. So I don't think prices, again, to that effect, prices would not be going down. So again, good market to buy into.
I think there's also so you have a lot of people moving out of the city, and then they're going to whatever a suburb or somewhere where they can find a house that's more affordable. What that really says to me is that they're going somewhere where you don't have as big of a population, right? You don't have as many people living there, so for that reason, houses have remained at a level that are more affordable to them. From a policy perspective, then you have the immigration segment that plays into this too, right? The government of Canada might say, okay, we now have an incentive to bring more people that are immigrating to Canada, to Toronto specifically, as part of the immigration program, to push them into this empty housing, or presumably empty housing because people moved out of the city.
Yeah.
So whether there's a kind of a flight from the cities, you're always going to have that. If there's empty housing, then you're going to have some way to kind of encourage more movement back to that area from a policy perspective, and maintain the level of occupation there or living there, because that sustains that economy, that infrastructure that was built, right? Toronto was built to have that many people in it, whether it's the utilities and the sewage system, all of that. So you need to be able to utilize that as a government.
Yeah.
So I think either way, personally, I think Toronto is a safe bet still. If you're looking at, okay, where do I make my best bet? Maybe it's not Toronto, but I think either way, long term, because it's such a big city, because it's like basically the capital of Canada, the biggest city.
You got people angry with that.
Well, it's basically
GDP wise,
the economic capital, right? I mean, like as in the biggest city, has a lot of the biggest head offices. It has economically, it is the economic center, right? Obviously, the government is not there, right? The government's in Ottawa, but economically, it's the biggest center, so it's a safe bet. But when it comes to growth cities, when it comes to which city is the best investment for the next 3 years, 2 years, 5 years, whatever it is, the different time frames, maybe Toronto is not the first place. Or definitely is not the first place, not maybe. But it's not a bad investment, I guess is my point.
I would say Toronto may not grow the fastest, but it would also does not have any chances of downfall either. Right?
Safe, consistent gains.
Yeah.
I think.
Safe, exactly what you said. Safe, consistent. If you're moving out of the city and you're going to one of these towns, it might go up, and it may have more room to go up, but it may go down as well. So you don't know. Overall, I don't think anybody's going down.
But the growth might slow down considerably.
Yeah.
Right. You don't. The other cities, because they're smaller, they're more unpredictable. Yeah. Right. You don't know what's going on. And when I'm saying other cities, it's not just. I don't consider. I mean, I think you're talking about. You're referring to the same criteria. The cities in the GTA are generally big cities, right? Mississauga is a big city. Vaughan is a big city. Markham's a big city. As you move further and further out, then you have more drop in population and then more affordability as well, right? So even Yeah, I forgot my point.
So, no, I was gonna say, there was and while you're
Pick
thinking
a city.
uh,
What would be your city?
where would I move out to?
Like, as in, no, not you would move out to. If you're thinking, okay, I'm buying a detached home, and it's just an investment. Again, this is not. We're not telling you to do this. This is just an opinion.
Yeah.
Just trying to figure out to get some insight.
Okay, so where would I buy an investment property? Is what you're asking?
Yeah.
It'd probably be
Like a detached house, not a multi-unit residential. So if you're buying a house, let's say, and you're just looking for
it
long,
would be in and around GTA. To be honest.
Okay. Any particulars?
No,
You're not attached to a location because your office is remote. You don't have to be close to anywhere.
Yeah. So as an investment property, I'm not living there. I would still do GTA.
Okay.
Just because for me, I feel like it's a hub, especially with immigration and all of that. There's always going to be demand there, right? So I feel like I'm not only looking for the upside, but I'm also trying to maintain what I paid. And I feel like that's the safest bet.
What do you mean maintain what you pay?
So like, yeah. So if I paid $1 million for a house,
Okay,
and I would like for it to go to 1.3, 1.52, whatever, but I also don't want it to go to like 800,000, 500,000, whatever. I don't want it to go down. So from a perspective of going down, I would say Toronto would be safer. Going up, again, because it's safer, the downside is safer, the upside may be limited as well.
That's true. No, I agree. I would say the same. I think the GTA generally has the economy there too.
Yeah.
Right. So each of the cities in the GTA has their own kind of economy and ability to stand on its own 2 feet.
Yeah.
So they're generally stable investments. I think generally, if I had to pick within the GTA, I think I don't know if Hamilton is considered part of the GTA, right? Kind of outside.
I don't know. It's kind of pretty far.
Okay, I'd pick Hamilton then, because Hamilton generally has one of the top 5 populations in Canada, and it has one of the top 10 economies in Canada as well.
Yeah.
But real estate prices in Hamilton are generally considerably lower than the top 5 cities.
So what about Kitchener-Waterloo?
Kitchener-Waterloo is consistent with its population. It doesn't rank as much in certain areas, but the pricing is still higher. Kitchener-Waterloo, I think, is more expensive than Hamilton. Population-wise, it's smaller. Economy-wise, I don't know how they pair up. I know Hamilton is a much older, has a lot more head offices as well. Some of the reports I was looking at, I think I looked into this like about a month ago. There were some of the reports I was looking at. They had Hamilton as one of the top like 3 or 4 economies in Canada in terms of cities. But these reports were like 5-6 years ago, right? Or maybe 10. They're kind of oldish.
Yeah.
So whatever that means, there are certain cities, I don't know if necessarily Hamilton is it, but there are certain cities that each have their unique characteristics that make them a better buy. Like you compare Brampton and Mississauga, houses are similar, demographics are similar. Mississauga as an economy is bigger, but if you just cross the border from Mississauga to Brampton, your prices drop.
Yeah.
Like literally, it could be 2 blocks down, and you have a 10% drop in price.
Yeah.
Right, or even more sometimes. So I think when you're figuring out where to buy, you can't just look at, okay, I want a detached house. That's it. You have to look at, okay, where am I buying that detached house, and what is the reason for buying it, right? Is it an investment property? Am I looking to kind of a 10-year return, 5-year return, renting it out to just cover costs? Whatever your specific needs are, you have to look at those and then figure out how am I going to decide where to buy.
Yeah. No. That's good advice and perfect way to wrap up this episode. Any last words?
That's all. I did not realize we were talking so long.
Yeah, we've been on here for some time. Yeah, so stop listening to us and go buy some real estate. Take care, guys.
Take care.